Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Talks, and I'm here with another video. And this video comes after 3 weeks of break. So we'll discuss about why the break took place. And there's a company that I have brought for you that I believe is trading at decent valuations in the market. So we'll discuss about that. Let's get started. First of all, disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should that with their own due diligence and research and amount to favor or against any company that I talk about. I am not a member of the NSC and BSC and that I am not a portfolio advisor. Whatever discussions I have with respect to markets or investment is purely on the basis of my experience into the market over the last uh, 10 12 years. And kindly do consult your financial advisor before taking any calls. Now, before I talk about these companies and the markets, here's small request. Can you support me on Patreon? Let's do that. Help me grow the channel. Help you ask me questions, seek out answers in greater detail. Once you get the membership, you'll have access to my portfolio, my watch list, which I keep updating from time to time. Discussions on domestic and global economies, updated watch list as I explained, and a long-term pick from my end whenever I feel like that there are some companies that I have available at reasonable valuations, I do bring to you. So the links will be in the description. Kindly do check that out. Now, in order to discuss about the markets, let me take you to the TradingView website. So we'll discuss about markets, Bitcoin, gold, etc., everything. And this video will not be extremely long. So we'll go step by step. There's a lot of things that needs to be covered. The markets and other entities. Plus, I'll discuss about Ethos, why the stock is falling, what are the reasons, and what lies ahead for the company. And I'll discuss about this company, which is Avanti Feeds, which I believe is trading at very reasonable valuations. And yes, there are headwinds with respect to global tariffs, etc. So we'll discuss in detail about this as well. Coming back to the markets, etc. Before I begin with this, I wanted to just explain as to why I was not putting up any videos over the last 2 3 weeks. In fact, on Patreon also I have been very less active and not that active, and the reason for that has been health issues in my family with the viral fever all across with my wife and children, and so things are now getting better. And I would say that uh, because of heavy rains and the kind of weather we have faced in this northern, I'm in the northern mountains, you can say, in that region. So things are was slightly iffy. I won't say currently, but was slightly iffy over the last 1 month or so, and that's why less videos and being less active on Patreon or YouTube. But inshallah, from now on in, I would be more active on the videos as well as on these websites. So extremely thankful to all of you who do support me through Patreon or YouTube and WhatsApp, and who have been supporting me all throughout. Your support has brought me over the last 8 years, 7 8 years, to this level that I have put up so many videos. I think I would have put up more than 1,000 videos already on YouTube, etc. You can check that out. So that is all your support that I have reached this far. So I would continue to put up videos now on a regular basis. I'll try to do that, but there are health issues, and that's why I'm on and off on YouTube, and I apologize for that. Now let's get back to the market, and I have been following the market, although I am invested only in a couple of only in one company, and people know about it who are on YouTube and who are members, and they know as to where I have put my everything in. But yes, I am following the market, and so we'll discuss with Bitcoin, and we'll go one by one. So Bitcoin is around 115, $116,000 at the moment. So if you see the chart here, the stock, the entity is trading at 115, 116,000 now. If you remember a year back, around January, not a year back, but 9 months back, around January of Yes, it was around January of 2025. It was trading at similar levels. So if you look at here, in January of 2029, it made a high of 109,000. So over the last 9 months, it has moved only about 4 5%, and gold has moved up so much. And also, I believe the move in Bitcoin is about to happen, and it's going to be a 30 40% move over the next 3 4 months. That what it seems like. Again, it is only my analysis. If you look at the charts here, it is now breaking out of this pattern and going up. So 112,000, strong support. And I believe that there could be some sort of a decline towards those levels, but once 118,000 is taken out, b- there's no looking back. I think we could be hitting new highs. We could be hitting, I'm sorry, new highs pretty soon. So that's on Bitcoin. For me, somebody who is invested and invested long term should continue to hold. 150,000 is this year's target by December, January, and probably you can add 30 35% every year. I think a CAGR of 30 to 35% possible here. That's what I feel on Bitcoin, especially after rate cuts in the US. Things should move higher. Immediately, there could be some volatility, but over a period of time, with the rate cut cycle beginning, such risky assets should do well. Uh, Coming to the Indian market, so we'll discuss about the Nifty first. So we are at 25,114. We are back above 25,000 after a lot of struggle. So if I look at here, we went all the way down to around 24,300 levels or so, and from there on in we are up nearly 1,000 points from the lows. We did go back to 24,400 300 levels in September as well, early September, but the move over the last 2 weeks have been quite good and heartwarming, I would say, because there have been a lot of selling across the board, and Nifty has not, and expectedly so, has not, you can say, reclaimed those highs of September of last year. So if I look at the 5 year chart, you'll have a better understanding. So we made a high in September, during the week of September 23rd, and the high was 26,300 or so. Let's round it off. So it's 26,300. We are not there yet, and it's a very good consolidation that we have seen over the last 1 year. So if you look at the RSI on a weekly basis, in September of 23 we were at around 76, and today we are at 56. So very good consolidation, and I believe it would be better for this market to consolidate even further for the next 3 4 months, and not make that high of 26,200, which is around 1,200 points away, 300, and probably just be in this range for another 3 4 months. That will give more strength for for this market, because the earnings are not coming through. I have kept on saying this. The earnings are 1,112 rupees for last year, and probably this year we are expecting a growth of around 7 8%. That's just about it on you can say Nifty earnings. So I won't be surprised if we are ending up with around 1,200 rupees, 1190, 1,200 rupees for FY26 overall. And on 1,200 rupees basis, the market, when it is growing at around 8%, if the earnings growth is around 8%, I don't see market staying at 21 times and all that. So if I multiply 1,200 with 21, that's where it is. So 1 year forward, we are at 21 times. On current earnings, we are even greater than that, closer to 22 times. So this market is expensive in my opinion, and probably we are on the cusp of another correction rather than an up move over the next couple of months. So I will not be surprised, and this is purely my opinion. Again, disclaimers do apply, but I won't be surprised if the market falls at 1,000 points, 1,200 points from here, and then really value emerges. So on 50-week moving average is around 25,400, 25,100. We could go below that by November. So in the next couple of months, once the results are out for the September quarter, we could be down rather than up from here because the earnings are not getting through. And so at around 23,900, if I calculate that based on 1190 rupees or something, we will be trading at 20 times FY26 earnings at around 9%, 8-9% growth, which would be still expensive but not that expensive. So there could be major correction in store for the market. That's what I feel. I don't see this market hitting new highs. It might do that, but it may not sustain. So there could be a 2-3%, 4% surge in the market, but eventually the market may not sustain those levels. In terms of small caps and mid caps, if you see here, the small caps are on a yearly basis, on 1 year basis, it's trying to go up and do better. But again, you see the strength is not there. The move is there, but the strength is not there. RSI is around 58, 57. Slowly it is moving up. So one jolt, one you can say unexpected news on the global front, on the national front, could again put small and mid caps under the cosh. So one needs to be extremely careful in here. If you are invested from a 2-3 year perspective, then there's no issue. I think over the next 3 years, the markets are going to do extremely well. But if you are in this market from a trading point of view, I think next 2 months could be difficult as it has been over the last couple of months as well. In terms of the mid cap index, again, slightly better, but in the same vein at around 58,200. This barrier of 61,000 has not been breached. So if you look at here, 59,600 was the high around those levels. And even here in somewhere in June, we were at 59,960. So not quite at 61,000. And so those levels of 61,000 that was reached around September of last year is not getting breached. And again, I would say that if this continues, it is better for the market from a longer term point of view, because once the earnings come through, then the market will be reasonably priced and would not have a run up. And that is what we want. So probably next 2 quarters could be difficult for the market till March, and this year could be a washout in terms of Nifty returns, and that had to happen after 4 years of Madcap run that we have seen. So if you look at a 5 year chart of the Nifty, look at the move from September of 2020 when the market was around 11,000 or so, around 11,500. We are at 25,000, made a high of 26,300. So 2.5 times over the last 5 years the market has been. So there had to be some sort of consolidation. We saw some consolidation here from October 21. If you remember the IRCTC days when it made highs and markets made highs till around September, October of 2022, when the market started to move higher than those levels, and eventually it breached that after 12-13 months. So I won't be surprised if that this continues for 18 months. Uh, it would be better. But if the results are really good, then we could see a decent up move. But remember, the growth is 8-9% and the PE is around 21-22, and that should not be the case. I would say a PE of 18-19 at a growth of 9% is reasonable. So I would be looking at this market very skeptically at the moment, and especially because of this, the India VIX. So at the moment, the India VIX is around 10.12, and it has dropped significantly over the last 6 months or so. If you look at it, the VIX was around in April. In April, the VIX was around 23-24, and today the VIX has gone down to around 10. So we are in for a volatile next 2-3 months. That's what I feel. Rather than thinking that okay, the festive season is extremely good and the market should perform, I think this could be a double whammy, and we could end up going lower in on the market. Now, if you look at the US dollar INR situation, that has also escalated. So, over the last 6 months or so, since May, so over the last 4 months, it has gone up from around $83, 83.5, 83.7, all the way to 88 and a half nearly. So this has really been a pain for the Indian markets, the way currency has depreciated, the Indian currency. And you look at gold and look at the way gold has surged after a consolidation at $3,300 per ounce, 3,300, 3,350. It was in April. It consolidated for a better part of the last 4 months and then has surged dramatically over 10-12% over the last 1 month. In 1 month, gold is up around 12% more than that. So that just signals the kind of volatility we could face going forward. That's what the market is thinking. The market is trying to price in something interesting, maybe from the elections that are going to come up in India, maybe geopolitical situation globally, maybe this tariff thing, etc. But things are not looking great for the market. That's what I feel. Currently, we are in a situation of a lull, but this could be a lull before a storm. That's what I think. So that's about the markets. Let's just discuss a little bit about Ethos. The stock has come down appreciably from the highs of around 3,300 or so. Recently, it was around 3,000. So around 3,000 it was in June. It was around 3,000 in July. From July till now, in 2 months, the stock is down by something about 20%. And the reason for that has been twofold. One is the results. The results for the June quarter has not been that great. It was a flattish kind of a quarter, just a 5% operating profit growth and a decline in net profit. That was one reason. The other big reason has been the GST rate cut. So interestingly, GST rates have been cut on items which are more commonly used by common men, by middle class, across the board, and GST rates have been hiked in some of the situations which are you can say high end items, which are items of you can say expensive items of great value. So Ethos comes into that category with the expensive watches that they are selling. So there is a fear, although there is no official word for this, but there is a fear that in terms of products that Ethos sells, the GST rates could be hiked over here compared to being lower, and so people are trying to price that in, or investors are trying to price that in. But the major reason for the decline has been the kind of results that Ethos has been producing. So if you look at it on a year-on-year basis, in March 24 they did 1,000 crores. In March 25 they did 1,250 crores. So that's a 25% sales jump. In operating profit also, from 158 crores to 197 crores, was pretty decent. It wasn't extraordinary, but pretty decent growth of around 25% on the profit front. But now if you look at it, in the last quarter, what they did was a flattish kind of performance. And probably September will not be that great either, because of the kind of weakening economy that we are seeing. Although I must say that in terms of shareholding pattern, FIIs are still there at 12.9%. DIIs have increased their stake, etc. So probably if you're an investor in Ethos from a 3-4 year perspective, you need to be patient over here. Let's see how September and December pan out, and then we could take a decision on where this goes. And this, if there is a rate hike in terms of GST, then it would be priced in by now. I think the fall has been appreciable from the highs of 3,300. We are at 2,300. We are already fallen 30% from the 52-week high. So I don't see much downside from here. It is trading at a PE of 68. So if you look at the historical PE ratio, the stock is trading at below the historical 5 year average. So from a 5 year average, it was 75. So on that basis, the stock is trading at very reasonable valuations. If you look at from market cap to sales basis as well, The stock is trading at 5, so the average from all time average is 5.6, and the stock is trading at 4.8 times price to sales. So it is a value at the moment, but the results have to support, the numbers have to support. Now, finally, what I bring to you is Avanti Feeds. This stock is trading at very reasonable valuations. From my perspective, what I feel is that the stock has come down appreciably. I mean, if you look at here, the stock has gone down on price basis from around 930 rupees all the way to 630 rupees. So that has been a fall of 25%. Mostly on this tariff news, because fisheries and fish products have had a major, you can say, had to take a major blow of the tariffs from the US, and they are a major exporter to the US, Avanti Feeds. So this is, in my opinion, a huge opportunity for somebody who's looking to invest from a 3 to 5 year perspective. Avanti Feeds at a PE of 16.8, at a market cap to sales of 1.7, and with the kind of numbers that it is coming out with, I believe that it is trading at very reasonable valuations. It in the June quarter also it did around 1606 crores on operating profit of 214 crores, which was a very good jump, a 30-35% jump from last year, and margins expanded from 11% to 13%. Overall, EPS grown has had grown by manifold. I mean, magnificently, from 9.4 rupees EPS had gone to around 13 rupees. So that's a 35% jump over there. Now, what will happen is, because of this tariff, the September quarter will not be that great for sure. Maybe December also, but then things should move on the brighter side. So I will be more of a buyer at these levels and accumulator of the stock. Maybe another 10% lower from here, 630, 620 is a possibility on Avanti Feeds, but overall around those levels of 630, it would be even more, you can say, attractive, 15 times earnings. Yes, earnings will not follow for the next 2 quarters, so the PE might just look bloated a little bit, but after a year or so, once they settle down, FY27 could be extremely good, and then you'll see a maybe a rally in here once things settle down with the tariffs front. So Avanti Feeds could be a dark horse from a 3 to 5 years perspective from these valuations that it is trading at currently. So this was a video on some of the stocks that I have analyzed over the past few days and the markets. Please like and subscribe my channel, hit the bell icon so you can get my video straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.